Good afternoon. You're watching Business World Live. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Monday. Okay, so it's not a good start for the index this week as shares continue to plummet, or at least on a downtrend still, as compared to a continuation really of what we've seen last week. Shares traded on the downside for almost all of Monday here, as you can see in this chart right here, capping the business day with a 0.54% decline to 6,459.76. You have more than 6.256 billion shares changing hands, valued at 4.892 billion pesos. Lack of any catalyst really to push shares higher today, especially as the country still grapples with high COVID-19 infections, a slow vaccine rollout. So far, 1.4 million doses have been administered since inoculation drive started back in March, with only about 190,000 Filipinos getting fully vaccinated, or at least getting administered with 2 doses here. The country is expected to restart anytime soon the use of AstraZeneca's vaccines on those age 60 and below. That's a week after suspending its use. The DOH is expected to release guidelines on its use, which will include precautions for those taking medications. Now, the DOH also reported today more than 600 cases of new variants here. It's those new strains that had Hong Kong banning flights from India, the Pakistan, and the Philippines over the detection of the more infectious N501Y variant, effectively classifying these countries as extremely high risk. Now, visitors who had stayed in these 3 countries for more than 2 hours in the past 21 days will be restricted from flying to Hong Kong, Macau, likewise, also requiring visitors from the 3 countries to quarantine themselves for 28 days upon arrival. Taking a check at how our airlines performed after that bit of news here, as you can see, Philippine Airlines here declined by as much as 0.8% here, now valued at 6 pesos and 10 centavos a piece. That's represented by the white line. On the other hand, the chart below that, you have represented by the orange line the performance of Cebu Pacific here. Cebu Air is now valued at 48 pesos and 30 centavos a piece. That represents a 3.6% decline here. But earlier in the day, more development here for Cebu Pacific. It wasn't a trading halt. That's after it secured $250 million worth of investment from International Finance Corporation, the IFC Emerging Asia Fund, and the Philippine affiliate of Indigo Partners. That comes in the form of convertible bonds. It comprises 318.75 million common shares with a conversion price of 38 pesos. Again, not a lot of bullishness here coming from investors when it comes to Cebu Pacific. Again, the stock has declined by as much as 3.6%. But it's not only Cebu Pacific that sell-off felt across the board in the main index here, with only 7 stocks ending the day in the green. As you can see, FGen is leading the pack here, up by 1.3%, now at 31 pesos and 30 centavos a share. ICTSI likewise also gaining here, up 9.9% to 129 a share. On the downside here, you have a number of stocks here in the red, led by Mega Road, inching lower by 4.4%, now at 3 pesos and 23 centavos a share. A number of stocks also dipping by over 3%, the likes of RRHI and Security Bank. But this time around, let me turn your attention over to one particular sector, that is the mining sector. That's after, of course, last week it became the bright spot here of the index as government eased mining restrictions over the past 5 days. That has seen an 8% climb after extending its rally today by over 8%. Of course, just recall the president lifted the 9-year moratorium on new mineral agreements to help boost revenues. This now allows government to enter new mineral agreements and review existing contracts for renegotiation. Let's have a check at some particular players here. A number of stocks still ending the day with a rally here. The likes of Lepanto Class B at least is up by over 5%. Apex Mining, Philex likewise also ending the day in the green. But how much does the government really stand to gain from the lifting of the restrictions on mining agreements? Now, to discuss that, we have Chamber of Mines of the Philippines Vice President for Communications, Rocky Dimaculangan. Good afternoon, Rocky.
Hi, good afternoon.
All
Uh,
right. So, how many projects are we expecting to proceed after the lifting of the ban, and how much revenue is the sector expecting to generate?
I Jess, and good afternoon to your viewers. Let me caution you first that because of the policy issues that the Philippine mining industry has faced, the 9-year moratorium on new mining deals among them, our reputation as an investment destination took a big hit, and it will take time for investors to regain their confidence in the Philippines. It also takes time for a mining project to reach operational stage. Apart from having to prove its financial capability to operate a large-scale mine, and we're talking about billions or millions of dollars here, a project has to undertake such steps as completing an environmental impact assessment and securing a social license to operate. Before a project goes to full operation, it will take 5 to 10 years, maybe even more. But it has to start somewhere. That's why this development is the most welcome one. Now, going back to your question, as not all mining firms are members of the Chamber of Mines of the Philippines, we can only talk about our own estimates. Now, three projects alone, Silangan, Tampakan, and Kingking, all copper gold projects, are expected to bring in a total of nearly $5 billion total capital investments over several years. Annual exports from these three projects alone are estimated at nearly $2 billion. Now, annual government revenues, we're pegging it at 12 billion pesos, and LGU stand to gain 1.5 billion pesos, and our social expenses will also surge, no, to 770 million, and
Mhm.
IP royalties will also increase by another 632 million.
Mhm. Now, great that you mentioned earlier that it's going to take quite some time before the country actually regains its footing when it comes to as an investment destination, especially when it comes to mining. What then would it take for us to get there faster?
Uh, there are several other policy issues that need to be addressed. Number one will be the ban on open pit mining. We're the only country in the world that has such ban, and also the resolving of the suspension orders uh, to some mining companies until they've complied with the recommendations of the Mining Industry Coordinating Council. We believe that once these remaining policy roadblocks are removed, the industry can move forward much faster.
But then, of course, it's still a wait and see mode of whether or not these restrictions will also be lifted following the EO 130 from last week. Now, Sir Rocky, are we expecting any big ticket mining sites or projects that we should at least expect to reopen, or at least miners that will seek new agreements in the near term?
Uh, as I mentioned earlier, it will take some time, but what we're looking at, and hopefully these projects will go on stream,
Hmm.
uh, is the Silangan Copper Gold Project in Surigao
Okay.
del Norte, the Tampakan Copper Gold Project in South Cotabato, and the King Copper Gold Project in Pantukan Town. It's about 90 kilometers east of Davao City.
Hmm.
Now, these are projects to watch out for. These
But
projects,
then,
I'm sorry,
go ahead,
these,
sir. Go ahead.
these projects alone can bring the mining industry's total contribution to exports to 90%, no? 9% from 6% in 2019, and to
Mhm.
GDP to 1.5% from 0.6% also in 2019. Another company, Oceana Gold, has resumed uh, negotiations with the Philippine government for another copper gold project, this one in the DPO, Nueva Vizcaya.
Mhm. But then again, like what you mentioned earlier, the effects will not be immediately felt. So when can we expect that to at least stream in into the economy?
Uh, the earliest estimate would be 5 years. That's why it has to start somewhere, and this is a most welcome development.
Mhm.
Imagine,
And then how-
the amount of time we've lost because
Mhm.
of this 9-year moratorium.
Mhm. Now, how many jobs are you expecting to generate because of this development?
Again, we don't have uh, the exact figures, as not
Mhm.
all companies are our members. Uh, we estimate around 30 to 40,000 more jobs. No, that includes indirect
Under what time frame, sir?
within that span, 5 to 10 years.
Mm-hmm. Now, but at the same time, you have some corners saying that the government could actually earn more if only the fiscal regime for the mining sector were revised. Is the industry undertaxed?
Well, we believe that the doubling of the excise taxes under the train law is already enough. Our excise tax on gross has doubled from 2% to 4%. That's gross, huh?
Mm-hmm.
Uh, and we believe that the removal of this policy roadblock, the moratorium on new mining projects, will result in a far higher tax take for the government than imposing more taxes on the relatively few that
Mm-hmm.
currently operate.
Mm-hmm. Well, one contention here is that only companies under mineral reservations are required to pay royalty fees. Is it time for all firms to actually pay royalty duties? And should fees be based on gross value of minerals to actually help further boost revenue?
Now, there is a reason why companies have to pay mineral reservation fees or mineral royalties, and that's because the government has already vetted these areas, explored these areas. The government has already spent huge sums to guarantee that these areas have huge resources or reserves that are economically feasible to mine.
Mm-hmm.
That's what the mineral reservation taxes are for. Now, if for the other projects outside mineral reservations, it's the companies or the projects that invest hundreds of millions of dollars to find out if it's feasible to mine. And
Mm-hmm.
the rule of thumb is for every 10,000 prospects, only about 10 go to are feasible to mine, and
Mm-hmm.
proceed to. And even that is not a guarantee because, as I mentioned earlier, a company has to undertake environmental impact assessment, and the company has to secure the social license to operate. It has to be approved by the barangay, the mayor, the provincial governor, and the national government. So it's like threading a needle.
Mm-hmm. Definitely, a lot of things still need to be ironed out regarding this latest development for the mining sector. Like you, we are also waiting for the development, of course, of the IRR regarding that. But thank you very much for your time this afternoon. Rocky Dimakulangan, Vice President for Communications of the Chamber of Mines of the Philippines. Thank you, sir.
Okay, thank you, Jess.
Here are other headlines we're keeping our eyes on. The IMF says the Philippines still has fiscal space that it could utilize to support its economic recovery from the pandemic. IMF's COVID 19 policy trackers show that the Philippines' two fiscal stimulus packages under Bayanihan Laws 1 and 2 represented around 2.9% of the country's GDP last year. The government also allocated funds for credit guarantees and standby financing amounting to around 0.8% of GDP. The country's 4.5 trillion peso national budget this year is about 21.8% of GDP. IMF said the resurgence of COVID 19 infections and its impact on recovery amplify the country's need to maintain its fiscal support. The IMF tracker showed other economies in Southeast Asia, like Thailand and Malaysia, had bigger budgets for fiscal stimulus. Lawmakers are still pushing for a third stimulus package worth 420 billion pesos, but the measure lacks support from the government's own economic managers. The SEC reports an unprecedented rise in investment scams last year as the pandemic pushed more Filipinos out of the labor force, which in turn prompted them to take any opportunity to earn a living. The corporate watchdog described 2020 as a record breaking year as it issued 127 advisories against easy money schemes, 95% rather higher than the total 65 advisories issued in the previous year. The SEC said fraudsters are taking advantage of the investment landscape with new concepts like digital assets and cryptocurrencies. The most widely used investment scams in the country are Ponzi schemes, pyramid schemes, and boiler room operations. To address this problem, the SEC announced that it will now set an office dedicated to boost financial literacy among Filipinos, which will be called the Office on Investor Education. And those are the biggest stories this trading day, April 19, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.